welcome to another episode of Smart Money Sundays. I hope everybody's doing well and had a wonderful trading week last week, implementing some of the stuff we talked about in last Sunday's episode. All right, so first and foremost, kind of want to break down, obviously, the best opportunity from last Sunday's episode being GBPCHF. Obviously, I gave you guys this level down here at 1.26173 as a POI, and if you had marked that off and taken that, obviously was a beautiful intra-week trade, catching about 90 pips to the upside. All right, running out these relative equal lows as we account for our inefficiency to the left that we noted last week. All right, so beautiful trade there on GBPCHF. Now this one is still interesting in my opinion, as we can go up daily time frame, actually 8-hour time frame, even better. And obviously we still have this major area of imbalance that we have been looking to fill up the last few weeks in our episodes. We've been talking about this level. Now, I'm not sure this pair is quite ready yet. All right, it could be, and we are currently at our last point of return. Okay, we're at our last point of return here as we have traded into that imbalance. Okay, so if we were to go ahead and go long and refill that imbalance, then we would have to essentially respect this level. Okay, this would have to be our last point of call. Otherwise, if we break down, then this thing could really kind of melt. This thing could really melt for a duplicated move back down to the downside. Okay, filling up this whole range here. Okay, so we are at a critical point in this market, okay, where I would expect a higher low here because I would like to see price fill in that imbalance to the upside. Okay, and so I would be looking at obviously this candle here, which ran out our equal lows and traded into that point of interest from last week. I would be looking at this point as an entry point for long opportunity. Now, obviously, we kind of had a sell-off here at market close on Friday. I wouldn't really let this bother you too much. See that happen quite frequently, actually, where we kind of have a sell-off into a POI and price opens on Sunday and essentially just opens at mitigation and just flies. Okay, so I am looking at this level. Again, if we breach this, then we will have to reassess. I think if we do breach it, then we will be in for a kind of significant downfall on this cross. Okay, so that is GBPCHF. Again, I wouldn't necessarily just buy it here at market open. I would wait for lower time frame accumulation and kind of wait for the right time of day, the right session, right? This is GBPCHF, and this is a market that we only really want to be involved in, kind of London, New York overlap. All right, so just be patient with this one, and that's kind of going to be the theme of this week across the board is patience, because if you don't know, we have FOMC coming out this Wednesday. Okay, so typically prior to FOMC, there's kind of wild and weird price action as we approach that event. And so I would just be cautious and be patient and kind of sit on your hands and see what happens with FOMC, because FOMC really does affect the broader FX market. Okay, so I'll go into EURJPY and then I'll kind of get into the majors, which is kind of interesting and a little tricky in my opinion coming into this week. All right, but EURJPY, this one obviously broke down and breached that low from last week. And so right now, I believe what we can see on EURJPY is a run down into an old level that I had talked about quite a few times on Smart Money Sundays as well. Okay, I think this level would be a nice level and discount to get long again and go ahead and target, as you all know, our overall objective on the weekly time frame at 135.8, 136. Okay, I am solid on this target. Okay, so I'm treating retracements, higher time frame, lower time frame, as excuses to continue to look to buy EURJPY into that higher time frame level. And you all know this, and I've been talking about this for quite some time. All right, and so my level where I would like to get long is obviously this level here, which ran out a lot of liquidity and was never accounted for. Okay, so 131, really 131.9 is what I'll be looking at. Now, there is a slight possibility we do respect kind of this little down close candle here at 132.6. Okay, but I would prefer the steeper retracement into this level to get a better risk to reward and catch a lot more pips into our higher time frame level. Okay, now if we do essentially kind of just gap up and trade higher to start the week, I guess I will be looking for potential distribution, looking for sells, sweeping out this high, looking for a reaction from kind of this region, 133 kind of 50, and then I'll look to sell it down into higher time frame level. Okay, simply because this was a major liquidity run last week, okay, and I don't believe this retracement accounted for the actual orders that ran out the liquidity. Okay, so if we can retrace, run out this high, trade into our supply, then I will look for distribution to sell it again down into our buy POI. All right, so that is EURJPY for you. A couple scenarios. Make sure you mark off these levels on your chart as usual. All right, so let's now get into a couple of these dollar pairs, which, like I said, are kind of tricky at the moment. And as you know from last Sunday, I did mention the fact that there's still a possibility that we run the low again. Okay, and now as you can see on EURUSD, sure enough, we did. We have had one drive, two drive, three drives now into the low. Okay, trading further into our first POI. Okay, so EURUSD, I have two scenarios to play out on this, and remember, ultimately, I still believe price will trade up into 1.23 area, which ran out these wicks here, and potentially even make a new high into 1.25 ultimately. All right, so we keeping that target in the back of our mind. We still want to be looking at potential areas of interest to continue to buy this thing. And from my perspective, the way I'm looking at this right now is that they are pricing in dollar strength right now prior to FOMC, so that when FOMC the minutes and the statement is released on Wednesday, they've discounted a lot of these majors so that they can go ahead and get long again and really trade back up into our higher time frame POIs. Okay, so right now I think this is kind of a big sell to buy occurring on EURUSD. I personally have not been interested in dollar longs for quite some time, as the dollar has continued to be devalued and destroyed. All right, so having a long bias on the dollar is very tough for me. Okay, and so I am expecting significant dollar weakness to come with FOMC this week. All right, and so again, we are trading into our our first POI, as we've been talking about for the last few weeks. And so first scenario for me is that we simply run the low one more time and then trade up. Second will be, if we do breach our first POI, will be for price to trade down into this down close candle at 1.2025. Again, that's the second POI that we've been talking about for weeks now as well. All right, so we either run this and respect kind of this accumulation here and then get long, or we breach through this, fill up this inefficiency here, trade into this down close candle, and then look for buying opportunities. All right, so right now it's tricky. I really don't know, because of the significant sell-off down into this POI, that I want to see further confirmation on this. I want to see kind of a 1, 2, 3 pin pattern on kind of the daily time frame to give me that confidence that we are indeed respecting this level in this daily 50 EMA. Otherwise, I do think that we can trade down into this second overall POI. And that would kind of align more with our POI on EURJPY as well. All right, so that is EURUSD. Again, I'm sitting on my hands unless there's something extremely beautiful prior to FOMC. I will probably just kind of wait and see what FOMC does to the dollar. All right, so kind of same with AUDUSD. Obviously, we had been looking at this as a retail head and shoulders where they ran the neckline liquidity and snapped back within the range, destroying the retail traders. All right, now this one again, and kind of correlating this with EURUSD, it's a bit tricky. All right, obviously we were looking last week at kind of 5-minute levels here, and I'm still keeping these as POIs. Obviously our 5-minute inefficiency 50% at 7678, and then our secondary level here. I would like to see that where we open up and just a little run and then run higher. Okay, but secondarily, I think there's still a possibility now that we've ran all of the liquidity to the upside, triggered the buy stops. I think that there is a possibility we now run the low again, potentially trade down deeper into this kind of candlestick here, which you can see ran a lot of liquidity. All right, so if we do not respect that 5-minute level here, accumulate and react, okay, then I expect price to break through this low and trade deeper into this range, where we can then look to buy again into our higher time frame POIs at 7,900 daily time frame and 7,950. Okay, so a bit tricky. Again, sit on your hands and let price tell you its story. Okay. Same deal, GBP USD. Again, we've left all of this liquidity intact. All right, we continue to respect retail trend line, equal highs. Okay, so ultimately, again, this is confirmation that dollar will fall again. Okay, because price does not leave this liquidity intact. Okay, the banks do not leave this liquidity resting above these highs. Okay, they will ultimately take it out. Okay, but again, POI ran liquidity, and we kind of closed at that POI. So like Euro, we could have a little sell-off, run the low again, and then continue up, take out these highs. Okay. Conversely, if we breach this level, I think there's a possibility we then trade deeper down into 1.4030 and then look to buy it into this liquidity, retest this low at least. Okay, so another one, we just need to sit on our hands. All right, these dollar pairs, I wouldn't really get involved right away this week. Okay, be patient, be patient, be patient. All right, especially during FOMC weeks when there can be significant volatility and price doesn't follow typical price action and order flow that you would expect. All right, so the last one I want to look at is a pretty clean setup that I wanted to show you guys coming into this week. This is one that I am confident in, not going to be patient like I am with the dollar pairs. Obviously, this is not a major. This is GBP AUD. Very clean setup. Obviously, ran out equal lows here, engineered more equal lows, engineered more equal lows, sell to buy, ran out all the liquidity, traded into our demand zone here perfectly. Okay, sell to buy, sell to buy. So I would expect now this to hold. Okay, I'm looking at 50% of our down move here, as well as the open of this candle here on the 1 hour. And then we can take this thing up at least into 1.8400, 50% of this move here. All right, so this looks very, very clean. I don't really expect price to trade lower than this level here. Okay, 1 drive, 2 drive. I'm expecting now our 3rd drive into the high here on GBP AUD. It looks very, very nice. All right. So I hope you enjoyed this video. I hope you have a wonderful week trading. Again, big week, FOMC. We'll really get some clarity on what's going to happen with the dollar. As you know, a lot of these dollar pairs have been significantly ranging on kind of the 4 hour time frame for quite some time. All right, and I believe FOMC is going to give us that catalyst, that push to break us out, and then provide cleaner setups within trending markets. All right, so hope you enjoyed this episode. If you have any questions, feel free to message us on Telegram at Ariel FX Trading, or follow us on IG at Ariel__FX, and we'd be happy to assist you or get you involved in the community. All right, have a great day. Have a great week. Thanks.